If you're an investor who wants to build a solid property portfolio, but you've been struggling with confusion, analysis paralysis, or inconsistent results, watching others grow their wealth whilst your plans keep stalling, then what I'm about to show you in the next 15 minutes will fundamentally change how you approach property investing and portfolio growth. Hi, my name is Anubhav, and owning an investment property at the age of 18, that too commercial, whilst running my own business now over the last 7 years as buyer's agency, I've helped investors who were serious about building their property portfolio, not one, not two, not three, even to the point of building 5 to 7 properties in their portfolio. In this free masterclass, I'm going to pull back the curtain and show you exactly how investors like Jordan, being the first-time investor from Sydney, gained equity of 53% in just 24 months for a property purchase of $490,000, which is currently valued at $800,000. How cool is that? How we identified and secured this high-performing asset for Jordan was not just one client of ours. Let's talk about Josephine, who built a high-performing 5-property portfolio in just 2.5 years, yielding an equity of $500,000, diversifying their assets not just across different parts of Australia, but also into commercial, short stay like Airbnb for cash flow and high-growth properties that are neutral to positively geared. But first, let me be brutally honest with you. If you are an investor still sorting out your finances, your home, or you're not in position to invest at least $600,000, or you don't have permanent residency in Australia, this training is not for you. This system is specifically built for serious investors who are ready to take action now. People who already have the prerequisites in place, are ready to take action and committed to building a long-term investment portfolio. And if you've been stuck in that frustrating cycle where one year you feel confident and decisive, the next you're overwhelmed by conflicting advice, market noise, or missed opportunities, then you know exactly what I'm talking about. One moment you're ready to buy, the next you're questioning every move and wondering where real clarity is supposed to come from, thus fulfilling my dreams and how to actually achieve that modern retirement that you really need once you get close to your retirement age. Let me first talk to you what the real problem is on the ground. Most investors I speak to making the same 5 critical mistakes that keep them trapped in what I call the investment noise. They're gambling with their time, capital, and emotional energy on random opinions, social media snippets, and half-baked advice, hoping something sticks. Let me paint you a picture. That might sound a little uncomfortable today, but it will be quite familiar. One evening, you're scrolling through Instagram or YouTube, watching one reel that says Victoria is dead, another one saying Queensland is overheated, and the third one promising guaranteed growth in markets like Northern Territory. Then a friend messages you about a deal that their cousin did. Your WhatsApp group starts buzzing, your confidence drops, and suddenly, instead of moving forward, you decide to wait a little longer. Meanwhile, another year passes. You tell yourself you're busy, cautious, but the truth is you're stuck. You're trapped between market noise, social media, fear-mongering, and well-meaning friends who've never actually built a serious portfolio themselves. Or maybe you've tried to take that action before, but you really don't know what you were doing. You followed a hotspot report. You trusted that flashy post with bold charts and big promises. You nearly pulled the trigger, only to realize later the numbers didn't stack up. The growth was average at the best, and the opportunity cost was enormous. Here's a brutal truth. Trying to build a high-growth property portfolio this way is like trying to achieve modern retirement buying lottery tickets. Technically possible, but statistically, terrible strategy. And the worst part, whilst you're stuck also at analyzing, hesitating, or reacting to noise, disciplined investors are quietly executing a system. They are acquiring assets that are very strategic, compounding at a rate of 15 to 20% per year. They're stacking properties that actually move the needle whilst you're still wondering which headline to believe. But the smart investors have already taken one. This is not luck. Just remove all the guesswork, the emotions, and randomness from the equation, and we replace it with repeatable data-led framework designed for long-term property portfolio, and that's exactly what I'm about to show you. So, what's the difference? What are the investors who are quietly building 7 to 8 figures portfolio doing that you're not? Because most beginners or unsuccessful investors are doing exactly opposite to what actually works. They're chasing hotspots instead of fundamentals. They're reacting to headlines instead of data. They're buying emotionally, or worse, not buying at all. They jump from one strategy to the next. They rely on friends' opinions, Facebook groups, and flashy social posts. And every decision feels risky because there is really no framework underneath it. The investors who consistently grow at 15% to 20% per year have cracked what I call data led acquisition framework, a proven buyer's agent system built on real market evidence, not noise. It's not luck, guys. It's not about timing the market. It's a systematic approach that removes emotion, replaces guesswork with data, and allows property portfolio to scale predictably towards early retirement. And that system is built on three core pillars I'm going to break down for you right now. Pillar 1, strategic conversations towards your goal. This is where most investors completely fail. Instead of buying where social media is loudest, this step uses deep personalized situation, the demographics, the infrastructure, the yields. So stop guessing and start buying with conviction. Pillar number 2, asset selection with your risk appetite. Not all properties are strong and not all properties are equal. And this pillar is focused on selection of right assets in the right location, avoiding those common traps like poor land content, oversupplied stock, or cosmetic investment grade marketing. This is where experienced buyer agents protect the downside risk whilst positioning you for compounding growth. Pillar number 3 is portfolio scaling and compounding. Owning a property to building a portfolio, it's about sequencing purchases correctly, managing equity structuring finance intelligently, and repeating the process without overexposure. This is how investors move steadily towards early modern retirement. So when you put these three pillars together through a proven buyer's agent-led, data-driven framework, portfolio growth becomes predictable, repeatable, scalable. That's the difference between hoping that your next property will work out and deliberately building a portfolio that's designed at 15% to 20% per year. And that's exactly what our system is built to do. But before I break down how this framework works, let me show you exactly what's possible when investors stop guessing and start executing the right way. Let me introduce you to Raj. Raj was a residential investor who did what most beginners do. He spent months consuming content, jumping between suburbs, listening to friends, and waiting for that perfect time. When he finally bought his first property, it was safe, but it wasn't strategic. After working through a data-driven buyer's agent framework, Raj repositioned his approach. He stopped chasing hype and started buying assets backed by fundamentals, land scarcity, demand drivers, and long-term growth indicators. Within just 2 years, with his residential purchase experienced strong capital uplift, putting Raj firmly on track of 15 to 20% annualized growth trajectory. More importantly, he now had clarity. He wasn't guessing anymore. It was backed by strategy, it had a goal attached to it, and the strategy is repeatable for his next acquisition. And that confidence changed everything. Now, let me tell you about Priya. She was always wanting to actually get into an investment property, but like many investors, she was paralyzed by fear. Too complex, too risky, and just too many opinions online that was gripped by fear. Instead of reacting to noise, what she did was relying again on us to be able to guide her and obviously get into that deep commercial data that we have with obviously lease structures, tenant strength, yield sustainability, and the downside protection. That single commercial acquisition was a turning point for her. This is not easy. Borrowing positions, understanding cash flows, and understanding growth can completely change how your next property is going to deliver. That decision improved returns. It changed how fast she can scale and ready to buy her next commercial property with us. At that moment, most investors realize that this isn't about property type, it's about strategy. So let me break down exactly how this works. Starting with pillar number 1, buying with purpose. This exactly is talking about your goals and a long-term strategy that you need. Most people are just buying assets without strategy, as I said. So we got to forget everything. You don't have to think about things and the hotspot investing that you think about. Most beginners or struggling investors are choosing markets the same way people choose stocks off Reddit. Whatever is the loudest on social media is what people are going for, and that's called hype. What's happening this week? Are we talking about interest rates? Is RBI going to increase rates next month? Are they going to reduce rates? Is inflation going up? That's what the people are stuck with. They're not focused on this strategy. They follow what influencer reels are talking about. They jump on whatever their friends bought last year, and they're going by opinions on social media rather than actually making a strategic decision what is right. 1 week we are talking about Victoria. The other we're talking about Queensland being overheated. So what is the right strategy that's actually talking to what is my type of property that I should buy before I choose the state? So this is really important that you focus on goals. That is critical. What do you want to achieve in 10 years time? Are you actually after wealth, or are you talking about recycling in short term, which is the next 2 to 3 years that you want to get through? It's extremely important that you get that completely nut out before you actually start gambling with your money and putting things on hope, because strategic markets can work only when you are able to get your strategy right before you choose markets, before you choose property. And fundamentally driven strategy can give you a better approach to nail down the right type of suburbs that you're after. Look at the right supply and demand, what really matters. For example, if you're going to buy a property to renovate and flip in short 6 months, the way you look at the data in a particular suburb or area will be very different to a 5-year hold of the similar property. So you cannot use the same statistics of how you're going to buy the property when your strategy is completely different. If your strategy is about commercial, the due diligence for that strategy is completely different to actually buying a normal standard residential property that is simply buy and hold. So stop guessing, work on your goals and purpose before you start looking at the markets. Now let me tell you one more thing. If you're drinking coffee in the morning after you wake up and you're thinking about buying a property, that most people do, they're first jumping on realestate.com.au. That is the wrong thing to do. That is the 13th step in the whole process. You really need to nut down this first pillar, which is your purpose, your goals. What do you want? Write them down, bring clarity, and then move to the next pillar, being asset selection and risk control. This is where even investors who pick the right market will still not get it wrong, because they haven't done the right level of due diligence. Their strategy and markets are not aligned. They pick wrong markets with the right strategy. For example, most people think of doing development projects, but in the hype and hope that these markets will deliver results and they will be rising markets. So the actual result that they're getting from the development is not because the development delivered results, it's because the property actually went up in value. So you got to break that down. Am I actually looking at the right thing? If you're going to do subdivision, if you're going to build 1:4, you've got to deliver that in a flat market when you do your numbers. So you've got to get that right. You've got to put the proposition in the right context to understand what exactly are we going to be achieving an outcome out of this particular project. Even if it is simple buy and hold, how long am I going to hold this property for? Do I even understand what my yields will look like at the beginning and how these yields are going to deliver a result that will turn property from negative gate to positive gate? If you're not clear about that strategy, you are actually not buying the right property in the right market. If you don't know what your exit looks like, you really don't know what you're entering into. Most people enter into the market just buying the property just because their friend did, as I said earlier, but not realizing that this is my exit point and these are my clear exit criteria before you even enter will give you real clarity into what you're actually achieving. Of course, things will change along the way and you've got to continue to keep monitoring your portfolio. Stop drifting, buy the right property, manage it well, but be proactive, because that will deliver consistent, long-term, sustainable results. And this pillar is what protects you from costly mistakes that can set your portfolio back 5 or even 10 years. Let's now move on to pillar number 3, portfolio scaling and compounding. This is the difference between owning a property and having a mindset to build a portfolio that's going to give you early modern retirement from the very beginning, because you've set the strategy right. Most investors stall after their first or second purchases because they really don't know how to buy the property the right way. Not because they lack ambition, but because they lack structure, they lack clarity, and they lack what does the roadmap look like for me that's going to help me build that portfolio. How many properties do I need to build a passive income of $150,000 in 10 years? How many properties do I need today versus buying something in 2 to 3 years? And what does that look like as a mix of assets? How many commercial properties do I need to buy? How many residential properties do I need to buy? Do I even need to buy any properties? Do I need to buy and sell properties? Do I need to do renovations and flip? What is going to be my overall view of looking at it so I can scale this portfolio to the point that I can deliver to my goals? It's very important that this is a very intentional growth aspect, and you can map it down to where to buy, what to buy, structure it right, finance it right, how to recycle equity responsibly, how does it actually work with the right team that can deliver the results for you, whether it's your financial broker or your buyer's agent, or for that matter your accountant. That needs to work hand in hand. You've got to work like a team, not in isolation. That's what you have to have a team if you really want to scale your portfolio the right way. Get into the 7-figure, 8-figure type of property portfolio that you're building and really compound your portfolio over the years. Don't go into short gains. Look at this as wealth building exercise that is not only going to deliver your retirement but also going to build you the right legacy. And here's the most important part. This entire system is designed and executed through experienced buyer's agent using proven data framework, experience, not guesswork, not hype, and not hope at all. When these three pillars work together and put in the right place at the right time, in the right selection and the right way of doing things and doing the right due diligence, you are working with the right partner to deliver outcomes, not just buying the property, because anyone can buy a property, but only few can even talk to the portfolio, and very few of them are walking the mile with you to actually deliver this as a partner, the right outcome to achieve that early modern retirement that we are talking about. It becomes predictable, and that's how serious investors build portfolio that grows at 15 to 20% a year and put that early retirement firmly on your table. So what's next? Let me be absolutely very clear with you. I only work with very specific clients per month, and my team is highly dedicated to help you get to the next action. But we only want to work with serious investors who are ready with money, ready to spend $600,000 in the market and ready to buy today. So if you are not that person, great, you can take away this knowledge that I've given you for free today. Come back to me when you're ready. But today, if you're really keen and you really want to get this through, then we have a spot available for you, because we only work with 20 clients per month, and not because I want to limit my income and not because I only want to work with 20. It's because we are very selective of whom we want to work with, and that's why we want to enjoy being a partner in your journey. I only work with investors who are serious about their portfolio and they want to work at the portfolio level with us. Frankly, I'm not interested in investors who are just looking at data, talking about tools, and talking about what am I going to get in short 1 year. We are here to deliver strategic results. We are here to partner with you in your long-term journey. And we are led by data. We understand the experience that we overlay. And there are markets that many buyers are buying, which we are not even entering because we don't believe that these are going to be strategic choice for the markets. So if you really want to work with someone, a team that's delivering consistent results year on year with 15-20% growth on an annum, and also talking about giving you the right partners, whether it's accountant, whether it's brokers, whether it's actually financial planners, because you work with all of them all over Australia, then don't miss this. This is your opportunity to lock yourself in this month and get yourself on that client list. Else, you know what is going to happen? You're going to get to the next month and a month after and another year. Don't do that. If you're the action taker, we are here to help you build this portfolio. What you need to now do is click the button below and book your strategy right now with us. And this is going to be about 45 minutes, but it's going to be action-based element. It's going to look into your situation. It's going to look at what you do, where are you at right now, what do you want out of it, but come with some strategic position. Don't just talk property. Give me a plan that you want to achieve, and we will tell you how we can deliver. This free 45-minute session is going to be an eye-opener. We're going to show you more deals that we have done for our clients. We're going to talk about this 15%, 20% annual growth that we are seeing in our clients' portfolio, how we are diversifying, show you some case studies, which will be an eye-opener for you, because you may not have seen this type of growth before. And most people are still thinking what they want to achieve when we want to work with action takers. So don't waste time. Right now, click this button, because if you don't do this now, all you're thinking is, I will do this tomorrow. Tomorrow never comes. Action is today. So click the button.